Value added tax, aka VAT, is a consumption tax applied to most goods and services, and in this video we'll break down its basics, how it's calculated, and what businesses need to know to stay compliant from an accountant's perspective. My name is Jack Revis and welcome back to our channel, and today we are diving into a topic that affects absolutely everyone that buys products or services in or from the UK, VAT. So let's start with the fundamentals. What exactly is VAT? Well, it stands for value added tax, and it is defined as a tax on the amount by which the value of a product or service increases at each stage of its production or distribution chain. To break this down, it's a tax that is applied to goods and services that are bought and sold. As these goods move through the supply chain, VAT is added at each point. Businesses charge VAT to their customers, but they can also reclaim VAT on the purchases they make. This process helps to ensure that the majority of VAT is ultimately paid by the end consumer. Let's use a clothes shop as an example. The manufacturer will buy materials to make a coat for £50 plus VAT of £10. They then sell the finished coat to the shop for £80 plus VAT of £16. They have to pay the £16 VAT to the government from the sale, but can also reclaim the £10 VAT from buying the materials, so overall they only pay £6 in VAT. Then let's say the shop sells the coat to a shopper for £100 plus VAT of £20. The shop pays £20 in VAT to the government, but can reclaim the £16, so they only pay £4 overall. However, the shopper can't reclaim the VAT as they are not a business. Because of this, the shopper pays the whole £20 in VAT. This shows how VAT is distributed through the economy, but ultimately the end consumers pay the most VAT. If you are a business that earns over £90,000 per year, you must register for VAT and submit VAT returns to HM Revenue and Customs. This is something that is often avoided by small companies as they become afraid to cross the threshold because they will pay more money, so they prevent their businesses from growing. But what some businesses don't realise is that you may be better off by registering for VAT. This is because when you register, as I explained, you can actually reclaim the VAT you pay on your expenses. This means that the cost of your expenses decreases. Think of it like a 20% discount. This can then actually increase your profits. There is a calculator available from HMRC that can help you understand how your profits are affected by registering for VAT, and I will leave it linked in the description below. Most businesses submit returns every 3 months. This is referred to as the standard VAT scheme. There are also options to submit VAT returns monthly or annually. The purpose of these returns is to summarise the VAT collected from sales and the VAT paid on purchases, and the difference between these figures is either paid from the business to HMRC or refunded to the company from HMRC. These returns must be completed using Making Tax digital compliance software. We would recommend using QuickBooks, but there are other options on the market. On this software, you must track your sales and purchases and then report the final figures to HMRC via a VAT return. I would highly recommend getting an accountant to complete these VAT returns for you, because they can be quite complex and any mistakes could lead to either an overpayment to HMRC, which would put you out of pocket unnecessarily, or lead to an underpayment which could put you at risk of non-compliance proceedings. VAT rates vary by country. In the UK, the standard VAT rate is 20%, but certain goods are eligible for reduced rates. There is a 5% VAT rate applicable to goods and services such as household gas and electricity and children's car seats. There's also a 0 rate which is applicable to goods that are classed as essential. This includes most food and children's clothing. To make things even more confusing, certain goods and services may also be classed as exempt from VAT. This includes things like insurance, postage, and healthcare, etc. If you are VAT registered and you provide goods or services that are classed as exempt from VAT, you cannot reclaim the VAT you may incur on purchases related to this income. If you buy goods or services from a business that is not VAT registered, this would be classed as no VAT on your VAT return. There are also different types of VAT schemes designed to simplify how some business account for VAT to HMRC. One of these is the VAT flat rate scheme. On this scheme, you pay over a lower percentage of VAT to HMRC depending on your business trade, but you don't claim the VAT on any purchases. You can only use this scheme if your turnover is less than £150,000 excluding VAT. For more info on this VAT scheme, check out our short video here. Another scheme is the VAT cash accounting scheme, which is a scheme where you only pay the VAT over to HMRC when your customer pays you rather than when you raise an invoice. This is good for businesses that struggle with cash flow or if you've got a long payment terms on your invoices. You can use this scheme as long as your turnover is less than £1.35 million excluding VAT. You can also sign up for these schemes when you register for that, or you can opt into them at a later date. So as you can see, generating a VAT return can be a bit of a minefield, and it's important you completely understand the VAT rules before submitting a return to prevent any errors. If you suspect you may have submitted a VAT return with errors on, it's important you either make the corrections necessary or instruct an accountant to fix the errors for you. Reporting an error to HMRC comes with a lot less consequences than HMRC finding the error themselves. If HMRC does find a VAT error, they will assess the return to determine the correct tax due, and they may charge interest on the difference. You may also face a penalty depending on the reason the error has been made. That's it for today. If you found this video helpful, give it a thumbs up and subscribe for more accounting tips. And if you have any questions about that or other accounting topics, drop them in the comments below. Thanks for watching, and I'll see you next time.